Hello everyone, it's Dale here, and in this video I'd like to teach you a skill on how to read and evaluate any chart in just a couple of seconds. Because if you look at any chart, then it really consists of just three things or three patterns. The price is either in a rotation, like for example in here, or the market is trending, like for example in here, or there is a swift rejection of either higher or lower prices, like for example in here. Those are three patterns that every chart you look at, and it doesn't really matter what time frame or what trading instrument you use, every chart consists just of those three patterns, nothing else. And if you learn how to recognize this, then it will give you a huge edge in your trading. So let's go over a couple of patterns here. Let me do little drawings here. So right here, there's a rejection of higher prices, right? So that's the rejection. We also have a rejection in here, and also smaller rejection in here and smaller rejection in here. Now let me highlight the rotations. Rotation is in here, then there's a rotation in here, also a little rotation within this trend, and rotation in here. Also I missed this one, and that should be about it. Now what remains are the trends. So we have a trend here, 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 in here, and in here. And as you can see at this point, we named each part of the chart, and we needed just three patterns: rotation, trend, and rejection. So this is how, if you look at any chart, this is how you can break it down to those very easy to see patterns. Now some of them appear very often, some of them are rare. If we talk about rotations, like for example in here, then rotations appear 70 to 80% of all the time. If you look at any time frame, any trading instrument, then it will really be like this: 70 or 80% of all the time of all the charts, they'll be in a rotation, right? The rest is the trend, which is like 20 to 30% of the time. And the most rare of them all are the rejections, which are very rare and happen just now and then. And they don't really take up that much time. Now every one of these patterns have some meaning. When there's a rotation, which is most common, then the price is telling us that the market is in equilibrium. That means that the sellers and buyers found a fair price, right? This is the area with a fair price. Both buyers and sellers are content with the price being in here, and they are content with the buying and selling in this area, at least for the time being. Now, another thing that is important to note about rotations is that in rotations, heavy volumes are very, very often traded. Let me show you with the volume profile. Volume profile shows us the volumes, and the wider the volume profile is, the heavier volumes are traded in that zone which I selected with the volume profile. As you can see, in rotations, the heavy volumes are often the heaviest, right? Also, for example, in here. And the reason is that the big trading institutions are very often accumulating their trading positions. In other words, they are entering their trading positions there. And the reason why they do it in rotations is that in a rotation, they can do that. They can accumulate their trading positions without being noticed. And those guys have simply huge trading capital, which they need to allocate, and for that reason, they need time. So they do it in a rotation, where they are unnoticed and also where they have liquidity, right? Because there's equilibrium, there's enough buyers and enough sellers. So that's why in rotations, heavy volumes are often traded. And Remember this, because this is a very, very important thing. Now, another important thing here is that the longer the rotation, then usually the stronger the trend that comes after the rotation, right? So the longer the rotation, the longer it is, the stronger and longer the trend. So keep that in mind, because this is also a pretty important piece of information. Now, talking about the trends, trends don't occur as often as the rotations, and what they are telling us is that one side of the market is way more aggressive than the other one. In here, it's sellers. Sellers in this downtrend are way more aggressive than the buyers, and that's why the price goes steeply downwards, right? Sellers are aggressively pushing the price downwards, and they are doing so with market sell orders. Now what remains is the rejection. For example, this one. This is a pretty strong rejection of higher prices, and in here, in this example, this is telling us that buyers were pushing the price upwards aggressively, and then sellers started to jump in and pushed the price downwards, right? So this is a strong rejection, and it marks a very, very important point in the market, because this is a place which was defended, right? This is the place which was defended, and it was defended very aggressively here, right? So this is definitely an important place for all market participants. Everyone who's trading this chart right now knows about this rejection, and they're making their trading decisions around it, right? And that's why this also could work as a strong resistance zone in the future. Now, what I would like to do is give you a couple of more examples of those three patterns, so it is a bit more easier for you to identify them. So let's move the chart a bit. By the way, I haven't mentioned this, we are looking at euro-dollar 30-minute chart, and sometimes there are more ways how you can look at it actually. Like in this case, for example, you can look at the big picture and say that, for example, this was a huge downtrend, right? Or you can break it down into smaller pieces and say that that was a rotation, 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 and downtrend, downtrend, downtrend. Both ways are correct. It only depends of how detailed you want to be with this. Now, as I was saying, you can do this with any time frame and any trading instrument. So let me switch over to the ES. This is 5-minute chart of the ES. On the faster time frames, those are sometimes a bit more volatile. The mood is changing a bit faster because it's fast time frame. So in those cases, sometimes it's harder to identify those patterns because they change a little bit too often. But you can still do it here. It only is sometimes a bit more difficult. So if you look here, then we can look at this part as a rotation. Then there was also a huge rotation in here, and the rest were trends and rejections. So those were trends and those were rejections. And now the market is trending here. Let me do one more example. Let's go to chart of gold. This is a daily chart, and as you can see, it is way easier to read. It's way more calmer because the market sentiment doesn't change that quick as with a fast time frame. In here we see a very, very long rotation. Before that and after that, a trend, and before this trend there was also a rotation. Alright, so with the higher time frames it's usually easier to read this and recognize those patterns. Now let's go to the next very important point of this video, and the thing is why this is helpful. How can you use this in your trading? What you can do And what I do as well is you can build your trading strategy around those 3 patterns. For example, when the market is rotating, you can trade from the extremes of the rotation toward the center of the rotation. That means, in this case, shorts from the higher border of the rotation, longs from the bottom border of the rotation, and the ideal take profit would be the center of the rotation. So when you identify a rotation, you can trade like this. But what you also need to do is you need to keep in mind that after a rotation, there will be a trend. So the longer the rotation, the more vigilant you should be, and you should expect a trend, like here. And when the market starts trending, you need to apply another trading strategy. It could be breakout. A lot of people trade breakouts. Or what I prefer to do is I prefer to jump in that trend when the market makes a pullback, right? So for example, here is a pullback, and this is the place from which you go long. Another pullback, another possibility for a long trade, right? Wait for those pullbacks where the market gives you a little discount and jump in that trade and ride the trend. And at the same time, keeping in mind that the longer the rotation before the trend, the bigger probability that the trend will be strong and that it will be longer. Now what remains is the rejection. Let's go back to the ES, for example. And when you see a rejection like this one, this is a strong rejection of lower prices, then this tells you that this was an important zone in the past, that strong buyers were defending this zone, right? So this whole zone was a support and strong buyers were defending it. So it is also likely that when the price comes back to this support zone, there will be a reaction from there. It could either bounce off that support, which could give you a nice trading opportunity to go long from the support, or another scenario is it shoots past the support, and this would give you an information that sellers are very, very strong and determined that they were able to push through this strong support. And what you can do with this kind of information is that you know that sellers are strong, so you want to join the winning party and you want to start trading shorts because you got a clear signal that sellers are dominating the market and that they pushed through a very strong support. So those are the 3 patterns which you can use to read any charts in just a couple of seconds. It is very, very useful skill to develop. At first, identifying those patterns could take some time and it will take some practice before you perfect it, but it is not really too difficult, and I highly recommend learning how to recognize those patterns and use them in your trading. So I hope you guys liked the video. Don't forget to hit the subscribe button so you don't miss out on any of my new released videos. And if you'd like to learn more about the way that I trade and about specific trading strategies, then I recommend visiting my website, which is trader-dale.com. And if you go here where it says trading course and tools, then it will take you to a page where you can browse my trading education and custom-made trading tools. And if you really want to level up your trading game and want to be in contact with me and other pro traders in a live trading room every day, then check out this page here, which is the Funded Trader Academy page. There's a video where I'll explain everything. Alright, so that's about that. Thanks for watching the video and I'll be looking forward to seeing you next time, and until then, happy trading.